I welcome you all to this novel course of WhatsApp training on credit appraisal for bankers. The objective of the course is to improve your skills in credit assessment of proposal by reading and interpreting balance sheet and also income tax returns. The course is divided in 6 modules to give in-depth know-how of various areas of ratio analysis, working capital, term loan and also the assessment for non-fund finance. Besides, a special module on the reading of income tax return is also designed. This course will be useful to you not only for appraisal of fresh advances but also in monitoring them as to periodical review of the existing advances also as much as of importance as a sanctioning a fresh one. The methodology adopted for this training is first the group of students admitted to the module will be formed just like yours as of now. On first day, a PowerPoint presentation with audio input will be shared. During the course, PDF documents containing relevant information will also be uploaded on the group. Various in-course exercises will be given and students are expected to solve and return to personal WhatsApp of the faculty. At the end of the course, the feedback of students will be taken. If a student rates the module below 50%, then 50% fees will be refunded at the option of the student without asking any additional questions or justification. Great leader Swami Vivekananda said, "Take risk in life. If you win, you will lead, and if you lose, you can guide." This is a very classic example and aptly applicable to the credit appraisal and credit department. Advancing itself is a risky business and hence minimizing the risk is the objective. If we cannot minimize, we should uh, apply some tools for mitigating it. And for sure shot winning, you need to improve the credit analysis tools. Hence, this course aptly applies to this credit appraisal course. Start your tools to sharpen to get the success in this field. A famous says that one who know and he knows that he know is a wise man. You should follow him. Often we should select the teachers and colleagues to work with you based on these qualities that he knows and he knows. But many a times you may not get this because this is that way a rare category. Then the second category is that he knows but he is not aware about this. He not knows that he knows. He is a sleeping person. Awake him. You will find around your subordinate that they are not aware about their capacities, capabilities, abilities. So make them aware and give them opportunities to use their knowledge and grow your institution. There are many such people. Third says that one who knows, but he knows that he is not aware about it, is a student. Teach him. Certainly in this category, in new era, we should be aware that we are not aware and that awareness should be improved to go to category number 1. So that is what is needed. Fourth category is of people who know, who knows not, and they are not aware about that they are ignorant. They are just fools. Ignore them. Naturally, not having a knowledge is not a crime, but not having the knowledge and not putting efforts to get the knowledge is a very bad thing. You will find many such people around you. Please ignore just and don't waste time on them. Let us start our journey to reach stage number 1 and to have we will have a look over structure of the course. Modules of this course are divided in 6 modules. First 3 modules A, B, C are dedicated to balance sheet reading and analysis of working capital limits. Next, module D is for non-fund facilities, understanding and assessment. Module E is for term loan assessment. And last, module F is for read income tax return. At the end of these three modules ABC, your ability to read, interpret and assess the working capital limit will have a marked improvement. You would have understood intricacies of CMA format submitted by the borrower and art of accepting the projections spelled out in CMA data and minimize risk for bank by taking appropriate security within the balance sheet and also outside. At the end of these three modules, A, B, and C, your ability to read, interpret the assets and working capital limit assessment will have a marked improvement. You would have understood intricacies of CMA format submitted by the borrower and art of accepting projections spelled out in CMA data and minimize risk for bank by taking appropriate security within the balance sheet and also outside. And ultimately, it will minimize risk for individuals, you also. Now let us begin our course with the first module A. Please go through this presentation and try to capture the knowledge imparted. Ask communication for this. Forget your status while asking. Sometimes you may feel that how can I ask such a small query? But don't hesitate, ask it. You will get a reply to your question from faculty within 24 hours. And if you are not satisfied, convinced, understood the reply, ask again for the explanation. Additional explanation will also be provided. Our objective of this course is getting complete knowledge. And always remember, if you are not knowing anything, it will be known as of now to this small group. But when you are working in a branch or working in a particular position, and if you fail or if you are not understanding, it will come to know to everyone. And the objectives of the course are to understand that audited balance sheet submitted by the company is as per law applicable to that entity. Means what is the applicant, whether it is a company, cooperative society, trust, which law is to be applicable to that entity. Our study of these laws is also desired to understand various facets. For other entities, the chartered accountant decides the format, which is generally close to company law provisions. We have to just check it. Secondly, ensure that the income tax return which are submitted to you are submitted in full and all the annexures are enclosed. Many times borrower do not submit some annexures. The main document is statement of income. This will give you lot of information including sources of income other than one for which the loan is applied. For understanding this, you will have to study Income Tax Act and Finance Bill revising provisions of Act every year on 1st February in budget. The balance sheet is supposed to be reclassified as per bank's requirement. For the accounts where you have insisted for CMA format, the borrower will complete the reclassification and put it into format. But there is a catch sometimes. While reclassifying, the accountant may make intentionally or maybe by mistake wrong classification by taking some term liabilities to net worth, some current liabilities to TL or net worth. Besides, on the asset side, intangible assets are shown as current or fixed assets. Some non-current assets are shown as current assets. This is done with an objective of showing rosy picture. You need to check it minutely by applying knowledge you are gaining through this course. For the borrowers for whom CMA format is not insisted, you will have to reclassify and put it into structured format as per bank's requirement. You must analyze the total income consists of which factors. Compare the other income with the main activity income. Also check for continuity consistency of other income. You must aware about the provisions of Income Tax Act and Finance Bill presented as budget. The bank have to consider various parameters for the different types of the facilities. Balance sheet is always prepared as per the applicable applicable rules and laws to the entity, particularly limited company, cooperative society, trust, individual, etc. Various stakeholders are also interested in this document. Shareholder looks for safety of its capital, appreciation in book value, and likely dividend, bonus, shares, etc. While employee of the entity looks for profitability and possible wage rise, bonus, etc. Tax authority is interested in finding out whether there is any tax evasion, and while debtors and creditors, supplier, customer is interested in his part of dealing with the company. The bank, on the other hand, not only reads existing balance sheet but also the projections for next years by the entrepreneur and decides the quantum of finance that can be considered to the entity with margin available and decides on the rate of interest based on the risk perception revealed. Hi, now we will proceed to know the various terms which you should understand thoroughly. In course of your service, you may have heard the term financial statements, mainly balance sheet, profit and loss account, trial balance, and auditor's report. While proceeding to our subject, one principle should keep in mind that any business is separate legal entity and it has to follow the rules of the state. The financial statements submitted to various government authorities in prescribed formats needs to be prepared as per the acts applicable to that entity. Mr. XYZ is a natural person, but any business carried by Mr. XYZ under any nomenclature is a separate entity. In business, any activity factor can be denoted shown in terms of money. You will receive all these statements from the borrower, but for your understanding the information regarding the statements, you must have an understanding of some words, technologies, terms. Statements need to be audited for threshold turnover exceeding certain amount as per requirement of the act applicable to the entity besides Income Tax Act. In remaining cases, unaudited statements are acceptable. They must be signed by owner of entity and certified by auditor if required by law. The threshold limits are subject to change. The first term is double entry bookkeeping. Every transaction is recorded in the books of the entity by debit and credit to appropriate heads by equal amount. Like in entrepreneur bringing capital into business will be shown as debit to cash or bank account and credit to capital account. We will repeat, in double entry bookkeeping there are two heads involved. First one is cash or bank account and the other head is capital account. Whenever there is a capital brought in by the entrepreneur, capital account is credited and the contra entry, double entry for debit is done to cash or bank account. Second term, trial balance. Trial balance is a summary of outstanding balances in each account, creates a trial balance, which is a worksheet with two columns, one for debits and one for credits, that ensure a company's bookkeeping is mathematically correct. In short, summation of debit side should be equal to summation of credit side. Alternatively, we can say the assets and liabilities of any enterprise should be equal. In numerical form, in numbers. Second characteristic of trial balance, the debits and credits include all business transactions for a company over a certain period, including the sum of such accounts as assets, expenses, liabilities and revenues. Third one is the items of trial balance are further segregated into following two statements, namely income or profit and loss statement, and the other one is balance sheet. We will see first the income or profit and loss statement. The profit and loss statement, in short generally we call it as a PL statement, is a financial statement that summarizes the revenues, costs, expenses incurred during the specified period, usually a fiscal quarter or year. The P&L statement is synonymous with the income statement. These records provide information about a company's ability or inability to generate profit by increasing revenue, reducing cost, or both. Some refer to the P&L statement as a statement of profit and loss, income statement, statement of operations, statement of financial results, statement of income, earnings statement, or expenses statement. Now we will see the balance sheet. Balance sheet indicates the financial position of the business on a particular date. It do not reveal whatever the enterprise has done in throughout the year or in past. It indicates the assets owned by the businessman and claims of the owners and creditors against the assets in the form of the liability. An asset represents an economic resource for a company which can be used at a company's discretion, and its use can be precluded or limited by the owner. What is audit report? We generally insist for submission of this report, which is certification of correctness of balance sheet with its comments on deviation. This is issued by chartered accountant. CMA report. It is a format prescribed by RBI, and every bank has got a threshold limit for submission of example. A loan application for business above rupees 25 lakhs. Submission of that format is a very must. This 25 threshold of 25 lakhs may vary from bank to bank as per risk appetite of that particular bank. Now we'll see GST or income tax returns and assessment. GST, we all know, it's a goods and services tax. It's applicable for all the entities. As of today, the threshold limit is exceeding 40 lakhs. Means GST applicable to all the entities whose value of sales or services provided in a financial year exceed rupees 40 lakhs. Income tax is applicable for all the entities whose net income exceed rupees 5 lakhs. As such, bank insists for the copies of periodical returns filed with assessment done by tax authorities. Types of assets. Current assets are short-term economic resources that are expected to be converted into cash within 1 year. Current assets include cash and cash equivalent, marketable securities, accounts receivable, inventory, and various prepaid expenses. Means what are the assets which can be utilized which can be rather converted in a cash in a short period. Fixed assets. Fixed assets are long-term resources such as buildings, computer equipment, computer software, furniture and fixtures. Intangible assets, land, leasehold, machinery, vehicles, etc. Financial assets. This term is at this stage we are rarely using or rarely applicable in our general normal proposals we are handling as of now. Financial assets represents investments in the assets and securities of other institutions. Financial assets include stocks, sovereign and corporate bonds, preferred equity, and other hybrid securities. These assets are classified as current or non-current assets depending on their nature. In small businesses, we rarely come across this type of assets in the balance sheet. Intangible assets are economic resources that have no physical presence. They include patents, trademarks, copyrights, and goodwill. Non-current assets are the assets which don't contribute to the business of the company in day-to-day activities. Example of non-current assets include unquoted investments, real estate, and all assets other than those related to business. The other side of the trial balance is liabilities. The business owns to others. Mind well that even a capital is also a liability as business owes to the owners, known as business entity, known as net worth. There are two main types of liabilities: long-term liabilities and short-term liabilities. Short-term liabilities are also called as current liabilities. Both types are listed on a company's balance sheet besides owners' funds. Firstly, we will see long-term liabilities. Long-term liabilities are financial responsibilities that will be paid back over more than a year, such as mortgages and business loans. Short-term liabilities means current liabilities. Current liabilities are financial responsibilities that will be paid back within a year. These includes sales tax, usually payable every month or quarter. Sales tax, nowadays it is GST. Payroll taxes, income and employment taxes withheld from employees and paid to the government. In our cases, we are familiar with the profession tax. Loans and mortgages, payments that will be due in next year. Creditors or accounts payable, money you owe to the supplier, you have to pay back. Salaries and wages owing, interest payable, income tax payable, customer deposits or prepayments for goods or services not provided yet. Lawsuits payable, debt payable within a year, contracts such as a cell phone contract you cannot cancel without penalty, advance lease payment received, insurance payable, benefits payable, taxes on investment, accrued liabilities like interest owing that has not been billed for by the lender. Generally, in small scale units we are handling at branch level, very few items from this list are applicable, but just for your information, keep this in mind. There are so many variety and which items can be included in current liabilities. Now let us begin our course with the first module A. Please go through this presentation and try to capture the knowledge imparted. Ask any question for this. Forget your status in the bank. Sometimes you may feel that how can I ask such a small query? But don't hesitate. Ask it. आज एक को मालूम पड़ेगा you are not knowing, but it may land you in trouble afterwards. But don't hesitate to ask it. You will get a reply to your question from the faculty within 24 hours. If not satisfied with the reply, ask again for explanation, additional illustrations. Our objective is getting complete knowledge. The objectives of the course are to understand that audited balance sheet submitted by the company is as per law applicable to the entity, means what is the entity of the applicant, whether it is a company law, a company, or it is a cooperative society, it is a trust, it is an individual, it is a LLP, it is a private limited, etc. Our study of these laws is also desired to understand various facets. For other entities, the accountant, means CA, decides the format which is generally close to company's law provisions. Second objective is income tax return. Ensure that the return is submitted its full copy. Many a times borrowers do not submit some annexures. The main document is statement of income. This will give you a lot of information including sources of income other than one for which loan is applied. Remember, for understanding this you will have to study Income Tax Act and Finance Bill, and these provisions are revised every year on 1st of February as on today. The frequency may change afterwards. The balance sheet is supposed to reclassified as per bank's requirement. For the accounts where you have insisted for CMA format, the borrower will complete the reclassification and put it into format. But there is a catch. While reclassifying the account, the accountant many times make a mistake, intentional or by just by unintentionally. He may classify by taking some term liabilities to net worth, some current liabilities to total liability or net worth. Besides, on asset side, intangible assets are shown as current or fixed assets. Some non-current assets are shown as current assets. This is done with an objective of showing rosy picture of the business. You need to check it minutely by applying knowledge you are gaining through this course. For the borrowers for whom CMA format is not insisted, you will have to reclassify and put it into structured format as per bank's requirement. You must analyze the total income consists of which factors. Means for reclassifying, you should know under which head what should be taken. Compare the other income with main activity income. You must aware of the provisions in Income Tax Act and Finance Bill presented as budget. The bank have to consider various parameters for the different types of the facilities. While taking admission to the course, you were asked to write on your understanding of these terms often used in assessing credit proposal. Some of you have done well in answering the questions, but unfortunately, some have dug the question with answer IDK, I don't know. They might have done this with fear of failure, with a perception that I am a branch head, or so many years and being asked such preliminary faltu questions. Why should I reply? You must answer these questions. If you answer it correct, then we will able to know it. When your answer is wrong, we will assess you and explain your mistake or misconception. Not answering the doubt in your mind remained forever. Always remember the 4 categories we have described in first phase. I would like to share my classroom teaching experience with this questionnaire. I used to distribute this to the participants with an announcement that all the correct answers would fetch a price of ₹100 and used to put a ₹100 note on a table. There was no occasion to give this prize. Once my chartered accountant friend, who often used to take my advice on the CMA format, got elected to their association and invited me to give 2 lectures on working capital management in the association hall in Kafpare. There also I started my session with the same questionnaire and changed an announcement little with just a little change. I kept ₹100 note and told that the first participant solving this correctly will get this note. Since I was afraid that all of those 33 participants would certainly solve it correctly. But at the end, nobody was all correct and ₹100 note did not part me. Aim of sharing this story is not to tell my pride, but to make you aware that there are a lot of misconceptions in this area, and you need to clear and focus your vision on correct understanding. At the end of module, you will again given the same questions which you are expected to solve correctly through the knowledge gained in the module. And remember, the often misunderstood terms are working capital and NWC, net working capital. Learn them very carefully. Often the liabilities are classified in borrower's balance sheet as secured and unsecured. As per requirement of Act, we need to look at them from the perspective of ownership, means whether it is owned or outsider, and term of repayment below 1 year or above 1 year. While the assets also need reclassification based on firstly weak out intangible assets which have got to realize distress value, got no realizable distress value, and then things brought into business for doing the business as either fixed or non-current assets, which latter will be security to our term lending, also as collateral or working capital collateral to a working capital finance, and remaining assets which are part of business cycle will be classified as current assets, which later will become security for our working capital finance. So try to understand the importance of the reclassification.
Participants, you must have completed till now the questionnaire filling column AA. With the today's input, try to complete column BB. You will get answers there. Keep on reading the training material sent to you. Ask the questions on the group. Text your queries. Raise the doubts. Be knowledgeable. Be confident. Thank you. Welcome back. Let us take the presentation further. We are aware that many of you are working and find it very difficult to spare 2 hours on training, but try your best. When there is a will, there is a way, and your hard work is going to help you for a long way till your last day of job. Therefore, be patient and spare time. While taking admission to this course, you were asked to write on your understanding of these some terms, often used in assessing credit proposal. Some of you have done well in answering the questions, but unfortunately, some of you have ducked the question with answer IDK. I don't know. They might have been done this with fear of failure, with a perception that I am a branch head or working for 5 to 10 years in service, and I am not aware if I do a mistake, it will how others will react to you. But you must answer the questions to clarify yourself and to get the knowledge to faculty that at which steps you are standing. When your answer is wrong, we may assess you and explain you where your mistake where you are doing mistake or where your concepts are not clear. Not answering the doubts in your mind remain there, or sometimes maybe prove very costly to you, or sometimes you may go with it till your retirement. I would like to share one classroom teaching experience of one of our senior faculty. He used to distribute this to the participant with an announcement that all correct answers would fetch a price of rupees 100 and used to have rupees 100 note on the table. There was no occasion that he lost his note. Once, his chartered accountant friend, who often used to take his advice on CMA format, got elected for their association and invited him to give 2 lectures on working capital management in the association. There also, he started his session with the same questionnaire, and just there was a change in announcement that the first participant solving correctly will get this note, because he was a bit afraid that all our chartered accountants and that all those 33 participants would certainly solve it correctly and he may have to lose 3,300. Aim of sharing this was will interesting, because even if chartered accountant can do a mistake, why not we are a layman? In compared to chartered accountants, we are very ordinary people, not aware of much about the accountancy and commerce. But ultimately in that course also, he he doesn't have to pay that 100 rupees to any of the CAs present in the class. Therefore, it is very important to get clear our concepts, focus on our vision, and we should get correct understanding. At the end of the module, you will be again given the same questions which you are expected to solve correctly through the knowledge you have gained throughout this module. Remember, The often misunderstood terms are working capital and net working capital. Learn them very clearly and carefully. Often the liabilities are classified in borrower's balance sheet as secured and unsecured. As per requirement of Act, we need to look at them from perspective of ownership, means whether these are owned or outsiders, and term of repayment below 1 year or above 1 year. While the assets also need reclassification based on firstly take out the intangible assets which have got no realizable distress value, and then things brought into business for doing the business as either fixed or non-current assets, which latter will be security to our term lending. We can take it as a collateral for working capital finance, and remaining assets which are part of business cycle will be classified as a current assets, and which may be the primary security for our working capital finance. So try to understand importance of reclassification. Now we are going to reclassify all the liabilities into three groups: net worth, term liabilities, and current liabilities. While the assets will be reclassified in our four groups, namely fixed assets, non-current assets, current assets, and intangible assets. We are going to use NW for net worth, TL for term liabilities, CL for current liabilities. And for asset sides, FA for fixed assets, NCA for non-current assets, CA for current assets, and IA for intangible assets. Kindly remember these nomenclatures because hereinafter short forms will be used many a times. First, mark all the items shown as contra entries appearing with equal amount on both sides as contra items and ignore them from both assets and liability side. Then we will start classifying liabilities. We will ask some questions, and depending on the answers, we will classify it in appropriate column. First question. The question asked to be is whether the amount belongs to the owner. If the answer is yes, then classify as item under NW. Second question. When the liability is repayable, according to the reply, the liabilities due within 1 year will be classified as CL, and remaining liabilities will be treated as TL. Most of the items in reserves and surplus represent NW, barring few which are specific reserves like bad debts reserve, gratuity reserves, etc. They will be liable to be classified as TL or CL depending on its utilization or requirement. For example, in case of gratuity reserve, the amount due to employees retiring within the next year will be treated as a CL, and obviously remaining amount will be treated as a TL. If the breakup is not provided with or not available, then we will classify entire amount as a TL. Some entities create a depreciation reserve accumulating depreciation in this account with conservatism principle apply, and this amount to be reduced from FA. Remember well that the order of the question is very important. For this, I will share a story with you. Sardar Baldev Singh, who was India's first defense minister in Nehru cabinet, was a very wise and efficient politician. His only drawback was he was knowing only Gurumukhi. He was not aware about English. Many times the occasion used to come to have a speech or dialogue in English. His secretary was a very smart person. He used to write the speech for minister in English but in Gurumukhi script. And he was explaining the meaning also to minister, where stress should be given, where to take a pause, like that. And he was getting results from him also. On one occasion, Lioness Club of Elite Females in Delhi invited him for the prize distribution function. As a chief guest, he has to deliver some lecture, some speech. His secretary prepared an appropriate speech, and for that speech, minister took thundering applause from the audience, and then come turn of a tea with important office bearers. For that also, secretary has given some brief questions, and minister was sharp enough. He was prepared, fully prepared. Then one lady was sitting next to him. Hi, hello. After that, he asked that lady, "Are you married?" That she said no. Then Sardarji asked him, "How many children do you got?" Lady get so famed and left the meeting with sobbing gesture. Then came turn the second lady. Sardarji asked her, Sardarji realized something went wrong. I will change the order of the questions. Then he decided the first question to be asked about children. Therefore, for the second lady, he asked, "How many children you have got?" She replied, "Sir, I have one son and two daughters." Sardarji shot second question. "Are you married?" You might be you might guess what was the result. Remember this story. This will help you to remember the importance of the sequence of the questions to be asked for classifying assets and liabilities properly. Now let us classify the assets by asking following questions to all the unclassified items till earlier question. Remember to ask the questions in same order. Recollect Sardar Baldev Singh's story always. First question. Whether the asset will get value in case the unit goes in financial distress. If answer is no, then classify the item as IA. IA means intangible assets. These examples are goodwill, patent, absolute stock, bad debts, investment in sister concerns, loan to friends, relatives, dealership deposit, which is likely to be confiscated for violation of terms and conditions of agreement, etc. Sister concern investments can be treated otherwise if you find good reason to do so after perusing the financials of that sister concern. Second question. Only to remaining items, ask a simple question. Whether the item is a part of a business cycle or brought into the business. All the items which are part of business will be classified as CA, while assets required to do the business will be termed as FA. Now let us classify the assets by asking following questions to all the unclassified items till earlier question. Remember to ask the questions in same order. Recollect every time Sardar Baldev Singh's story narrated just now. It will help you not to forget the importance of sequence. First question. Whether the asset will get value in case the unit goes in financial distress. If the answer is no, then classify the item as I. IA means intangible asset. The examples are goodwill, patent, absolute stock, bad debts, investment in sister concern, loans to friends and relatives, dealership deposit which is likely to be confiscated for violation of terms and conditions of agreement, etc. Sister concern investments can be treated otherwise if you find good reason to do so after perusing the financials of that sister concern. Ask the second question. Only to remaining items, ask a simple question whether the item is part of business cycle or brought into do the business. All items which are part of business will be classified as current assets, while assets required to do the business will termed as fixed assets. Then comes the third question. After marking current assets and fixed assets, some items will remain. They will be called as NCA, means non-current assets. With an exception of cash and bank and the quoted investments which are quoted on stock market or money market like shares, bonds, etc. Besides bank deposits as they are repayable on demand by the bank, all these cash, quoted investment and bank deposits will be included in current assets. Note that other deposits with company, chit fund, society, etc. are not to be included in current assets.
and will be classified as NCA or IA as they are not repayable on demand.
Participants, you might have completed questionnaire by filling column AA. Now with today's input, try to complete column BB if you find the answers. Keep on reading the training material, continuously read it, ask questions on the group, raise your queries, ask the doubts and get it clear. Thank you. See you on in the next session. Welcome back through our this innovative training program. Let us take our presentation further. It is known that you all are working and finding it very difficult to spare 2 hours on training or concentrating for the reading, but this hard work will help you a lot. Therefore, keep on reading. It will benefit you for a longer period.
Asset classification of all the assets and liabilities item, we plot it in 7 categories. Total of asset side and liability side should be same, and which is equal to total of trial balance. We can deduct the contra items because we have dropped it from assets as well as liability side. Now from the above 7 figures, we will reduce it to 5 figures by doing 2 operations. Arrive at total net worth TNW by subtracting I, intangible asset, from the net worth NW and combine FA with NCA or new FA figure. If you are doing analysis of working capital finance, or if it is a term loan assessment or a composite proposal for both working capital and term loan, then carry all 3 remaining heads, means FA, NCA and CA. FA means fixed asset, NCA means non-current assets and CA means current assets. We have already removed I, intangible assets. We have regrouped and reduced the items from 7 to 5. Now again check that sum of each column tallies and which is equal to trial balance figure minus I, intangible assets. This will give you arithmetic consistency.
For any proposal having substantial amount, we often call for the CMA format. CMA format is filled and prepared by the customer, ideally. It is the expectation. And it is surprising that nobody knows what is CMA. CMA stands for Credit Monitoring Arrangement. Then what is this credit monitoring arrangement? Credit monitoring arrangement was existing in past prior to 1997. If we study the path of working capital in India, it is interesting. Let us start from 60s, 70s, 80s. In that period, the big corporates used to avail the limits much more than the requirement, business requirement. Disproportionate to their requirement, maybe we may term it as a speculative purpose. I will explain in the next slide in detail how they were earning profit from it. To stop this, RBI first in 1974 formed a Tandon committee, and then in 1970 other committee was formed, Chore committee. These committees were asked to study the pattern and to suggest the methods for working capital finance. Result of this was inventory norms and credit monitoring arrangement discipline. Format is in still existent, but discipline has gone. It was implemented in 1975 and taken back by RBI in 1997. What was the discipline? That any advance above rupees 1 crore as working capital finance needs to be vetted by RBI in those days. Therefore, these formats need to be submitted to RBI. Nowadays, this practice is discontinued, but we still ask for CMA format because no other solution, no other format any bank has devised. you are having chance, you can format and design new format for better arrangement. And we should know the history only for the sake where flaws, loopholes can be seen, can be avoided, and the risk is minimized. Now we will see how the excess finance was availed by company. It was officially without and knowingly by the bank the excess finance was given to a particular company. Company was having its annual production of 1000 per year. For that the required raw material was 600. Company used to purchase stock of 800, and against that stock bank used to give finance of 600 with the margin of 25%. It was fair enough. After that 600, by that utilizing this 600, company used to get more stock. For that additional stock also the finance was given as 450, 75% of the 600. With the help of this 450, again the company used to buy stock of 330. It was again pledged to bank. Pledging means keeping the stock in the possession of bank. Literally, bank possesses the stock. The godown keys of the godown are kept with bank. At the permission from bank only, we can take the material outside and use for production, further processing. This cycle goes on, and all the stock is under the since the keys were with bank was feeling really secure and safe. Now you can see in the table shown in your slide that for the stock of 2630, company was getting total limit in different six accounts is of 1973, and generally these stocks were purchased during the harvest season, therefore at cheaper rate. Then rates goes higher and company was much earning with the selling of the stock because its requirement for production was of only 600, means it was piling up stock more than 4 times for its actual requirement, means company was getting profit from trading instead of manufacturing. The company thus got financed much more than its requirement, means rather much more than its annual production, sale of production. Hence need of some strategies restrictions should be arised. This shows that the need for the Tandon and Chore committee, why these committees were formed and why the need-based finance should be practiced. Here, I presume that you are aware about the three facilities: hypothecation, pledge, and mortgage. In this case, the stock security was the type of finance was the pledge finance. Since the CMA format is still in use, we will see the contents of the format. It consists of 6 forms. The first form is showing the particulars of limits and about the association of the company. The second part is related to operations. The basis is cost sheet. Basically, it is the rewriting of profit and loss statement. Third form is showing the liabilities, which is the subject matter of our study. Form 3A gives analysis of the liability side of the balance sheet, and the form 3B is showing the analysis of the asset side of the balance sheet. Form number 4 is comparative study of current assets and current liabilities. Form number 5 is calculation of working capital and maximum permissible bank finance, MPBA, as it is popularly known as. Form number 6 is the fund flow statement. It shows from where money came and for where they are deployed. This is precisely the CMA format consisting of 6 forms. Means totally actually 7 forms but numbered in 6. Now we will see contingent liabilities. What is meant by contingent liabilities? These are the liabilities which are not shown in balance sheet or shown as contra entries that are receivable and payable on both the sides. These liabilities need to be studied carefully. Why? Because those are the future liabilities or may or may not be arising. They can be revealed as a footnote shown by contra entry or can be we can view it from CBIL also. What are these liabilities? These are, for example, some court cases pending with tax department. Tax is demanded from the tax department. Company had challenged the demand. The matter is pending with court. If the company loses the case, the liability will arise to pay. It may be in form of some corporate guarantee. Therefore, in these cases, the original transactions need to be studied very carefully for which the guarantee is given. In our analysis report, these transactions won't be considered, but the entries to be studied, analyzed, checked for the impact on our assessment. Since they are not reflecting in balance sheet, we have to go for the audit report. These are off balance sheet items. Audit report need to be read carefully. It contains the aspect of the company. It reveals the serious irregularities if there are, and we can assess the impact of those irregularities in our proposal. Another irregularity is inconsistency in following accounting standards. Indian accounting standards supposed to be followed by all companies working in India. Particularly, provisions like depreciation and future dues of staff should be provided for as per the accounting standard norms. Auditors make comments on these items if not followed or whether followed. One has to read it carefully and assess for the impact on the appraisal. Auditor may provide some calculations. LFAR long form audit form where auditors make some statutory declarations and comments. Once go through it, you will find many areas where banker may be interested or may be getting impacted. Besides this, adherence to various laws may be commented by auditor. The laws related to profession tax, income tax, TDS to be followed meticulously. Audit report will show all this information. So read the audit report carefully. Thus, the audit report will show you if there is any adverse coming. Take impact also in consideration on the company while assessing the credit requirement. This will help you to know the health of company and its behavior, its integrity also up to certain extent. Till now you have completed questionnaire by filling column A. Now with the inputs, complete column BB. If you didn't get the answers, raise query. Submit solved questionnaire to WhatsApp 9220484034. I repeat the number 9220484034. Thank you. Hello friends. Here now in our first module. I hope you all are learned a lot and equipped fully to uh, handle the proposals hereafter. Still you are having any doubts, any questions, you are free to ask. Shoot them on WhatsApp. It will be answered as you might have seen for last 8 to 10 days. Your queries are answered immediately. If possible, put your queries in group so that others may be benefited from it. If you are afraid of or shy of, you can shoot on individual numbers also. Thanks. Your feedback suggestions are always welcome.